Welcome back to Rekt Radio, the one and only show that deciphers the signal from the noise in the wild world of crypto. I'm Sunny, and folks, the tide is turning. I can feel it in the air. The long winter of regulatory hostility might finally be starting to thaw.
And I'm Cole, here to remind you that a spring thaw often causes dangerous floods and reveals all the things that were frozen and buried under the ice. Let's not get swept away by a single ray of sunshine. The landscape is still treacherous.
You see treachery, I see opportunity. And the biggest opportunity is right here at home. We're finally hearing influential voices call for an end to the brain drain. A former SEC commissioner, Paul Atkins, is out there making the case to reshore crypto companies, to bring them back to the United States. He's talking about a soft touch approach, creating a clear, welcoming framework. This is huge.
Sonny, let's be very clear. This is a former commissioner. That's like a retired general saying the war strategy is wrong. It's a nice headline, but it doesn't change the orders on the ground. The current SEC leadership is still very much on the warpath. Atkins is basically admitting that the U.S. has catastrophically fumbled his lead by driving its brightest innovators offshore. His plea is a symptom of the damage that's already been done.
But it's the first step to reversing that damage. You have to acknowledge the problem before you can fix it. Hearing a respected voice like his articulate the need for a change creates political cover for a policy shift. He's laying the groundwork for a bipartisan pivot. This isn't just about stopping the bleeding, it's about rolling out the red carpet. Imagine the explosion of innovation and capital if builders felt safe setting up shop in the US again. We're talking about making America the undisputed hub for the next generation of the internet.
I'm imagining it, and it gives me pause. What does soft touch regulation actually mean in practice? Is it a well-defined, sensible framework, or is it just a regulatory vacuum? If the rules are too loose, you open the floodgates for the worst kind of grifters and scammers to set up shop, all under the veneer of being US-based. When they inevitably blow up, who gets the blame? The entire industry. The regulators will use it as the perfect excuse to come back with a vengeance and say, "See, we tried being nice and you abused it." It's a potential trap.
That's such a cynical take. It's about finding a balance, not abandoning rules altogether. It's about creating clarity so the good actors can thrive. And speaking of good actors, the industry is proving definitively that it can police itself and work to make the world safer. The narrative that crypto is just a tool for criminals is officially dead and buried.
Oh, here we go. Don't tell me you're about to declare victory over illicit finance because of one press release. What happened?
It's far more than a press release, Cole. The blockchain analytics firm Chainalysis just played a key role in taking down a massive global child sexual abuse material site. They were able to trace the cryptocurrency payments that funded the entire horrific operation. This is the ultimate validation of our core premise. The transparency of the blockchain is its greatest strength. It creates a permanent public ledger of activity that is an absolute nightmare for criminals. You can't do that with cash stuffed in a suitcase.
Wait, hold on. Let me get this straight. You're celebrating the fact that a horrific criminal enterprise was being funded using cryptocurrency, likely because of its promise of anonymity and borderless transactions? This isn't a clean win, Sonny. This is a messy, complicated cleanup operation for a problem that our ecosystem helped create. We needed a highly sophisticated multi-million-dollar private surveillance firm to unravel a knot that was tied with crypto threads.
But that's my point. The tool used to commit the crime contained the seeds of its own destruction. The blockchain's transparency is a feature, not a bug. It makes this kind of activity traceable in a way that the shadowy world of traditional finance can only dream of. This case proves that crypto isn't the Wild West. It's a place where bad actors leave immutable fingerprints all over the crime scene. This is how we build legitimacy. It shows regulators and the public that we have the tools and the will to keep the ecosystem safe.
It shows that we are outsourcing our security to centralized data surveillance companies that have contracts with government agencies. The same tools that caught these reprehensible criminals can be and are used to monitor anyone for any reason. Every time we celebrate a story like this, we are normalizing the idea of total financial surveillance on the blockchain. We are trading the original promise of privacy and decentralization for a new form of centralized control, just with a friendlier corporate face. So while you see a win for legitimacy, I see a major step toward a future where every single transaction is scrutinized. That's a very steep price to pay.
I think it's a price worth paying to root out the absolute worst elements and build a trillion-dollar industry on a foundation of trust. But I know what you really trust. Not arguments, not philosophy, but the raw data. Let's pull up the charts and see what the market thinks. I have the technicals for Bitcoin right here from TradingView.
All right, let's consult the oracle. I'm pulling up the one-day chart. What story are the indicators telling us today, Sonny? Is it a comedy or a tragedy?
It's a story of pure, unadulterated strength, Cole. The overall summary is a solid buy. But that's not the best part. If you look at the moving averages, the indicator that tracks the deep, powerful, underlying trend of the market, it's a strong buy. A resounding, confident, strong buy. That's the heavy current, the deep water, and it is pulling us inexorably higher.
You always get mesmerized by the rearview mirror. The moving averages tell you where we've been, not where we're going. Let's look at the dashboard right now. The oscillators, the tools that measure the immediate real-time momentum and sentiment, they're sitting at neutral. The engine has been throttled back to idle. So you have this massive divergence. The memory of past strength is strong, but the present-day energy is completely flat.
It's the most bullish combination possible. A strong buy on the long-term trend with neutral on short-term momentum is the market telling you it's taking a healthy, controlled pause. It's consolidating its gains on a high plateau before the next major ascent. This isn't a stall, it's a pit stop. It's building a base camp at a new altitude, acclimatizing before the final push. The underlying conviction is confirmed, it's just patching its breath.
That's a dangerously optimistic reading. To me, that divergence screams exhaustion. The bulls push the price up, as your moving averages show, but now they're out of steam. The neutral oscillators show that the buying pressure has vanished. They've reached the peak they can't conquer, and now they're just trying to hold the line. This isn't a base camp, Sonny. This is a stalemate at the edge of a cliff. The momentum is gone, and when momentum dies on an uptrend, the path of least resistance is usually down.
That's all for this episode of Rekt Radio. A new, friendlier regulatory dawn is breaking, the blockchain is proving itself a force for good, and the market is building a powerful high-altitude base for its next move. The future is bright, the future is a strong buy.
And from where I'm sitting, the friendly regulation is just talk. The blockchain's transparency comes at the cost of surveillance, and the market's momentum has completely evaporated. Don't get fooled by a pretty view from a cliff's edge. You've been listening to Rekt Radio.